Hello. Thank you for tuning in to my 2020 Steamboat Springs Real Estate Market Recap and 2021 Market Forecast. I'm Doug Labor, Broker Associate for Steamboat Sotheby's International Realty and General Manager for our downtown office. Being in the business for 38 years, I've been through many interesting market cycles, but have never been through the one like 2020 just produced. Market performance was so crazy and off the chart, I wanted to share them with you. What happened was both unpredictable and unprecedented, and I really stuck my neck out with predicting what will happen in 2021 and identifying the new normal in the steamboat market. So sit back, put your seatbelt on, and enjoy the show. If there were two adjectives that best describe the 2020 Steamboat Springs market, they were unprecedented and unpredictable. The market had to deal with an unprecedented occurrence of a worldwide pandemic, making the future of the market unpredictable at best. With the onset of the pandemic in late February, a COVID freeze suddenly fell upon various financial markets in March, including real estate in Steamboat Springs. Even with great ski conditions in mid-March, the Steamboat ski area even had to shut down all lift operations from fears of a somewhat deadly virus. Buyers stopped buying, and interestingly, sellers pulled their properties off the market. People were forced to work out of their home, where many eventually realized they could manage effectively. Compounding the pandemic panic was rioting that hit several cities, giving some a reason to look elsewhere for a safer haven and healthier lifestyle, yet keep their jobs by working remotely. The exodus for those wanting a change seemed to hit towns like Steamboat Springs at the end of May, and Steamboat's real estate market literally went from freezing point to boiling point overnight. Throughout the presentation, you'll see at the top left-hand corner of certain slides this unprecedented and unpredictable banner, which means whatever we're talking about was either unprecedented in our market by hitting an all-time high, all-time low, or was simply crazy and totally unpredictable. So with all this craziness hitting the market, what are the most important things that happened to it in 2020? Listings or supply evaporated. This graph shows data compiled from the Steamboat Springs Multiple Listing Service on a quarterly basis from 1995 through 2020. Many of the graphs used in the following slides will be similar to this and on a quarterly basis, for it gives the best representation of what's happening in our particular market. In real estate, listings are also known as supply. This graph shows the ebb and flow of listings in our market. Prior to 2020, the lowest number of quarterly listings occurred in Q1 of 2007 at 869. Then the Great Recession hit, and it shot up to a high of 2,385 in Q3 of 2010, then slowly went down until Q2 of 2020 hit and recorded 1,015 listings. Then everything changed in Q3 when we hit an all-time low of 801, followed by another record low of 537 in a recently completed Q4 of 2020. So now we'll take a look at transactions or demand. In the second half of 2020, transactions experienced the opposite effect than listings. Where listings went down significantly, demand jumped up. Q1 of the year is typically our least active for transactions. As you can see here, Q1 of 2020 wasn't any different. However, Q2 was typically one of our most active, but that COVID freeze I talked about earlier hit here, and Q2 of 2020 was only slightly better than Q1. However, what we lost in Q2 was certainly made up and then some in Q3, where we broke an all-time record with 609 transactions, bettering the prior record by 40 in Q2 of 2007, then breaking that new record the following quarter with 622 transactions in Q4. I love this graph, for it really tells the story of what is going on in the market between supply or listings and demand or transactions. I'd consider the market having a good balance when these two graphs are taking up the same space. When they're far apart is when crazy things happen. It's going to be real interesting to see how the market reacts to its current state of divergence between supply and demand, for we had the opposite positioning in 2009 and 2010, and prices took a fall for several years before supply started coming down and demand started rising. Prices did not start coming up until 2012-2013. Again, here we are inversed, where demand is high and supply is low. If the prior graph was a bit confusing, looking at the absorption rate will make things a lot easier to understand. The best way to describe the absorption rate is the dynamic between listings and transactions. It's the amount of available supply absorbed by the market over a given amount of time. So say there are 500 transactions over a quarter of the year, and there were 1,000 listings over that quarter, while the absorption rate was 50%, meaning 50% of the supply was sold or absorbed in that given amount of time, or that quarter. In other words, a 100% absorption rate means that in that time period, the number of listings sold equaled what came on the market. This graph shows what happened in 2020 and just how quickly the market turned in Q3. As mentioned earlier, Q2 is typically one of our busiest quarters of the year, but in 2020 it was dismal. However, Q3 skyrocketed threefold, setting a new quarterly absorption record at 76%. Then Q4 shattered that record to 109%. The market saw 574 listings and 622 sales. Keep in mind the number of listings is always fluid. Properties enter the market and leave the market daily, but here it shows more are being sold than what comes on the market with a 109% absorption rate. So guess what happens to prices when demand is high and supply is low? Prices go up. If you recall, the market experienced a high absorption rate in Q2 of 2007, and that is where the record average price of $756,000 occurred. But with that 109% absorption rate in Q4 of 2020, we broke that mark with an average price of $813,000. Looking at the black trend line, the average price in 1995 was $200,000. And at the end of 2020, it hit $675,000, representing a 238% increase over 26 years, or an average annual increase of 9%. This chart shows how supply and demand affects prices. Knowing there's a lag time between absorption rates and prices, you can see with the blue arrows, one would assume prices will continue to increase for some period, even if demand slows. However, as you can see, the absorption rate skyrocketed in Qs 3 and 4, So it'll be interesting to see what will happen to pricing and when supply can be added to bring that rate down. Here's a look at market activity on an annual basis. Annual listings are represented in pink, transactions are blue, and dollar volume in green. Although the first half of 2020 started at the end of the pack for transactions, listings, and dollar volume, that second half kick put 2020 in first place in dollar volume with $1.217 billion in sales and finishing the race $214 million ahead of the prior record in 2007. It finished second in total transactions at 1,655, right behind 2007 that posted 1,729 sales, and also finished the year with the lowest number of listings dating as far back as my statistics allow at 852. To summarize, key year-over-year indicators in the market showed listings went down 27%. Transactions increased 33%. Dollar volume increased 50%. Absorption rate went up 81%. Average price went up 13%. And median price increased 12%. So with all of this activity and price changes, were there any geographic shifts in our market? Based on the 6 major geographic areas in our MLS and focusing on non-commercial transactions that included single-family homes, townhomes, condominiums, and land, Steamboat was still the major focus of attention, capturing 64% of the market. North Route attracted 10%, and the Stagecoach area saw 9%. Taking Steamboat out of the picture, North Route increased in activity by 133% year over year. Stagecoach was second with a 65% increase, and South Route was third and enjoyed a 39% increase in activity. Along with geographic changes, did the market see any substantial change in the type of property people purchased from this increase in activity and pricing? For single-family homes within the town limits of Steamboat Springs, there was a 33% increase in single-family home purchases in Steamboat Springs to 224, a record for the market. This could be from people fleeing the city and buying this property type for their primary residence. Most real estate professionals use square footage as a valuation tool. Because it's difficult to value properties comparatively if one is, say, 2,000 square feet and another that is 3,000 square feet, this method calculates property in a least common denominator value. Single-family homes within the Steamboat Springs town limits fetched a square footage value of $402, which was an 11% increase from 2019 and a 60% increase from the past 5-year average. From a median price standpoint, year over year, median single-family home prices jumped 27%. Reaching over $1 million for the first time in history, the median price of a single-family home in Steamboat Springs hit $1,077,000, which is a 76% increase over the 5-year average and over $200,000 from the prior record set in 2008. So now let's take a look at Steamboat's condo market. Year in and year out, condominiums are Steamboat's most popular property type. In 2020, there were 381 condominium transactions, or a 14% increase from year over year. When looking at dollar per square foot values, they set a new record with $439 a square foot, a 15% increase over 2019, and a 53% increase over the last 5-year average. Regarding median price for condos, they also broke a record for median price at $447,500, which was a 50% increase over the last 5-year average. And halfway between single-family homes and condos, we have townhomes. Townhomes saw a nice uptick in transactions, and going from 155 in 2019 to 193 sales in 2020, or a 27% increase. As far as dollar per square foot values for townhomes, townhomes had the lowest percentage increase of the 3 residential property types for square footage values, going up only 5% in 2020 to $370. However, yet their median price still increased 13% to $727,500, most likely due to smaller unit purchases. And last, we'll take a look at land. As humorist Will Rogers once recommended, buy land, they ain't making any more of it. And people listened to him this year. Land has seemed to be the most volatile property type over the last 20 years. 2020 saw a substantial 196% year-over-year increase in land sales to 83. However, as you can see, there is a good drop in 2019 sales, which posted only 28. This could have been from the increase in building costs, which scared many would-be land buyers away into existing home inventory because it was cheaper to buy an existing home than to buy and build. Although that's still true today, the lack of vertical inventory has pushed more people into buying land and building. As far as price per acre values, from those high building costs I mentioned a little bit earlier, the land market has not enjoyed the appreciation the residential markets have seen in recent years. And likewise, on a median price per lot basis, you can see by this trend line, values have been relatively flat as well. The median price of a single-family lot in Steamboat last year was $393,000. Going back to the 3 residential property types of single-family homes, townhomes, and condominiums, the 3 property types track very well together on a dollar per square foot basis. Year over year, single-family homes saw an 11% increase, condos 15%, and townhomes 5%. Averaging those together, one can say home values in Steamboat Springs increased 11% from last year. Transactions for all 4 property types within the Steamboat Springs city limits increased substantially last year. The market really didn't see a change in 2020 from property type purchase, as condos captured 44% of the market, single-family homes 25%, townhomes are nearly the same at 22%, and land came in last at 9%. However, when looking at the entire MLS and beyond Steamboat's town limits, single-family homes are the most popular and captured 33% of the market, with condos shifting to second place at 28% of the market, land taking a big jump to 23%, and townhomes at only 5% of the market. When looking at affordable housing, which we will define as the lower 15% of property prices within Steamboat Springs, the most affordable property type was in the form of a condominium, and the median price in 2020 was $250,000. Median price for an introductory townhome was $314,000, and the entry-level single-family home median price was $540,000. All 3 of these property types have returned to 2007 pricing. On the other end of the spectrum is the luxury market, or the top 15%. And as you can see, the median price for a luxury condo in 2020 in Steamboat Springs was $890,000. Luxury townhomes had a median price of $1,725,000, and a single family home had a median sales price of $2.7 million. The reason for the high price of condos in 2011 was due to the completion and deliveries of One Steamboat Place and Edgemont condo complexes, which were high dollar properties located in the ski village. I think everyone who tracks the market felt that 2019 had the high end woken up with 33 sales priced over $2.5 million. Well, in 2020, that number nearly doubled to where 56 properties sold over $2.5 million. Pretty unbelievable. It's interesting that many forecasters back in the crash of 2007 said the luxury buyer was going to be buying smaller sized properties than what they had in the past, while the median size of high-end properties have tracked nearly the same over the past 15 years. And the top 15% of median sales prices were consistent year over year, with luxury single-family homes at $2.1 million, townhomes at $1 million, and condos at $890,000. Dollars per square foot values have all increased slightly year over year. So what is that infamous crystal ball going to tell us when we give it a rub for 2021? Well, looking at some of the factors that will influence the market, we're hopeful vaccines for COVID-19 will bring some return to normalcy. More people will return to work and the economy will begin to hopefully flourish. People will be able to freely travel and vacation, which should help our core businesses in Steamboat. We're also under a new presidential administration, and changes to tax laws may be on the horizon. This could include 1031 tax-free exchanges, which do occur in our market for people wanting to defer taxable gains when buying and selling resort properties. That has already been discussed. However, it has been talked about many times before, but with many legislators owning second homes and investment properties, it may be hard for them to approve a tax on themselves. Half of all real estate purchases in the Steamboat area are cash, so interest rates only affect the other half. Interest rates have been at record lows for several years, so even a slight rate bump will keep finance purchases affordable for those seeking a mortgage. This graph represents Steamboat's absorption rate and the S&P 500 index. The two are very compatible, as you can see, so as the index is happy, so is Steamboat's real estate market. Although some experts feel COVID-19 will create foreclosure numbers to increase, Routt County posted a record low of foreclosures in 2020 at only 11. And on a local level, the ski area has just received preliminary U.S. Forest Service approval for a 650-acre terrain expansion and new gondola. This would make Steamboat the second largest resort in Colorado. They have also just submitted plans to the city to redesign and redevelop Gondola Square. Typically, when ski areas make improvements to their infrastructure and guest experience like this, improvements in the real estate market seem to follow. Downtown Steamboat seems to be capturing more and more activity and is expanding into both Yampa Street along the river and even onto Oak Street. So what exactly will the new normal be? Since 2009 and after the Great Recession hit, the market slowly and steadily came out of the basement. Inventory declined, activity rose, and an increase in dollar volume followed. This rather linear increase changed dramatically, however, in 2020. Should we go back to a somewhat more normal routine in 2021 by putting the pandemic behind us, yet carrying on the same trend, this is what those trends look like for listings, transactions, and dollar volume into the future. However, one has to ask if these trends could realistically continue, especially if listings continue to decline. After all, listings are the gasoline that fuels the engine. There are some new projects in the planning stages, but they're at least 2 and 3 years out before delivery or even breaking ground takes place. January of 2021 started the year off where 2020 left off, with a record number of sales for the month. January of 2020 posted 56 transactions, and 2021 doubled that at 107. 2020 listings had 1,010, whereas 2021 started out with a mere 520. This path cannot reasonably continue, but if it does, prices will continue to go up, perhaps even exponentially. Well, here we go, the new normal. For 2021, I'm going to say that the listings will drop off this year, probably around 18% from 2000 levels, or to an average throughout the year of around 700. Because of the lack of inventory, transactions are going to have to decline as well, say by about 15% to 1,400 for the end of the year. And dollar volume will decrease also, but not as much, say, on a percentage basis as transactions. And because of prices going up, it'll only drop by 3% to around 1.18 billion. So there you have it, my crystal ball for 2021. I certainly hope you enjoyed my presentation and found it of interest. 2020 was one for the record books, and as you've seen, was undoubtedly unprecedented and unpredictable. It was also a difficult market for buyers, sellers, and even brokers. Many times, properties had numerous offers, placing a great deal of pressure on everyone involved. Simply put, if market demand remains, we need more inventory. And at least in the near term, an inventory increase won't be happening. Steamboat is a special place to live. It not only offers a healthy and active lifestyle, the truth be told, it's the people within this community that really make it what it is, and why my family has called it home for over 20 years. If you have any questions or would like to talk about the market in detail, I'd be happy to talk. Furthermore, what you observed in this presentation is just a hint of the market knowledge and insight you would have as my client. If you're interested in buying, selling, I'd be happy to discuss putting my 38 years of experience to work for you. Feel free to check out my website, or better yet, give me a call. Otherwise, have a great day.